Hi, David here, CEO and founder of the Freedom Founders Mastermind. Is real estate in a bubble? Is that really a place that I want to put my money, even though historically the wealthiest people in the world, in this country, have always invested some amount of their capital in real estate? Well, that last statement's true. Real estate has always been a great wealth builder. Why? Well, it's a tangible asset. It's a hard asset. And if you invest in real estate that you either understand, you understand the model, you understand the need for it, who's going to use it, which is somebody who pays rent typically, then you can make for a strong case for why real estate works well. It keeps up with inflation. It can be financed so that you can acquire real estate and build your wealth more quickly with less of your money. There's tax benefits. There's a lot of reasons why real estate is good. But is it always good? Well, not always. No asset is always good. That goes for any asset, any investment, whether you like precious metals, you like crypto or Bitcoin, you like financial markets, you like tech stocks, you pick it. There's a time when every asset class has its time in the market. There's a time when it's not so favorable. So what do you do? What do you do? Well, you have to have some understanding about the market and the economy and how things run. And that just takes some study. That just takes some study. If you're willing to do some study and understand the basic tenets of how the economy works, how the financial markets work, how the Federal Reserve works, how interest rates and inflation and recession and banking, fractional banking works. If you'll spend some time to learn the basics of that, you don't have to get a PhD in economics to do this, just the basics. You'll have an understanding about what I call asset allocation, or other people would call where to put your money. I typically this is my own belief, that you should put your money, most of it, in something you understand. And that means, again, you need to study. I'm not a fan of just giving my money to the market, to index funds, or to a money manager, or put it in a 401k and let someone else administer my money. I am not a fan of that at all. I think every investor needs to learn about where they like to study and what assets they like. That's what I did starting back over 6 years ago when I was in college. I wanted to understand how money works. I wanted to understand what the investment world meant. And so I started reading books. I read books about the stock market and mutual funds. I read books about tangible assets like real estate and business books as well, because I was going to be going into business as a dentist at some point. I was getting ready to go into dental school, so I was still a few years away. But I had my mind on the fact that I wanted to be an investor, and I wanted to learn how to be an investor. And that means study. That means study something outside of the core courses of science classes and topics and subjects that I had to pass to get my actual degree to go into dentistry, but it meant studying outside of that arena. Those are additional knowledge areas and skill sets that I developed on purpose intentionally, because I didn't want to be subject to just one mode of income. I think it's dangerous. I think it's dangerous for anybody. No matter how much money you can make trading time for dollars, it's a dangerous place to be, because things can happen. The markets can change. Your situation can change. You may become disabled. I mean, there's all kinds of things that can happen, and you don't want to be caught in a place where you depend on one area or one major source of your income. So I studied real estate. But back to real estate overall right now today. Am I a big fan of real estate? Well, yes, I am, but not in the conventional way that most people look at real estate, which is what? Well, it's owning it, right? We always think owning equity, which is what it is. Owning stocks is the same thing. You want to own shares, or you want to own the equity or a title to actual real estate, a tangible asset, because that's where you get all the benefits I just alluded to, the benefits that typically make real estate a great asset to invest in. Well, when the market's at an all-time high, and we've had the great bubble from the COVID stimulus that we had over the last several years, with cheap money, real estate's at an all-time high, and now with interest rates that have gone up at the most rapid rise in history, those valuations and the net operating income and the cost of everything else, property taxes, insurance, labor, materials, supplies, you name it, everything's gone up. Then the spreads on the cash flow, which is what really drives the values of real estate, have been squeezed. So where do I want to be today if I still like real estate? I want to be on the debt lending side. Well, think about a bank. When you borrow money from the bank to finance anything, your own home, your dental practice, or your dental practice office building, who gets paid first every month? Yeah, right, the bank does. The bank always gets paid first. You get paid second. You're the equity owner. You get paid on the profits that you can make off of owning that equity asset. And when you're in business, actually with your hands on the throttle, so to speak, you can drive decisions that can get you through recessions, corrections, things like that. You have your hands on the control. You are the operator. It's active. But on the passive side, investing in assets where you're not the driver, where you want to be more passive, which is where I like to be today, I may not have that same control. So how do I assert control in this case? Well, I don't want to own equities because I think equities overall, unless you just find something that's a steal of a deal, which they're out there, but not like they were 3, 4, 5, 6, 7 years ago. I want to be on the debt lending side, be the bank. I want to get paid first. That's a safer place to be. Now, I don't get all the tax benefits. I don't get the inflation hedge. But right now, I think we're in a disinflation period in those assets. Stock market too, disinflation. I think it's going to come down. I think it's going to correct probably relatively heavily. Why would I want to be in a position to buy at the top of the market in equities when I could play down here in the debt side, which in the financial market is like bonds. You know, bonds are typically a safer place to be. In the bond market, I can put my money in U.S. Treasuries today at over 5%. That's pretty darn good, right? In real estate, I can put my money in the bond market of real estate, which is first mortgages, and I can earn anywhere from a very conservative nominal 10% all the way up to 16%. But I have to know what I'm doing. I have to have a network and access points, which is something you can develop over time, or which I've developed over 40 plus years. So I have places to put my money. I study the real estate market and I study where I can put that money so I don't have to put it always at the same place at the height of the market in equities, which wouldn't make sense right now. Now turn the corner. We go through a correction over the next 12, 18, 24, 36 months. Look, historically, just go back to 2008. I can tell you the same thing. The market started breaking in late 2007, 2008, 2009, 10, 11. We didn't start breaking out of that last recession correction until about 2011, 2012. All that time when equities had gone down, and that's the time to go back in and buy the equities. That's the time to go back in and be a conventional real estate investor where you're buying into the equities, ownership, or buying shares of syndications or funds that invest in real estate or REITs, whatever you like. But that's the time to do it. So back to my premise, is real estate in a bubble? I say equities are, but I can still invest in real estate if I know where to go, what to do, and I can get much better returns than I can in the financial markets with a lot less risk. Real estate is not just real estate. You have to understand there's different dimensions. When you understand that, you have experience in the markets, you know there's always a place to put your money, to be safe, still make good returns, and be ready for the next opportunities to ride the market back up.